Good morning, folks, and welcome back to Almus Market Mornings. Going into the weekend, risk assets have been having a good time, especially after interpreting Fed's action yesterday. Equities have been strong, dollar has been weak, and interestingly, commodities have been rallying. And I'm not talking about gold or silver, but copper is at an all-time high, trading very strong. This sentiment did not it did not inspire the rupee, however, which continued to hit an all-time low against the dollar yesterday. Next week, we have the ECB and the BOJ, post which there should be a general quietness as Western markets shut down for the holiday season. Good morning, JK. Seems like a general risk sentiment towards the end of the year. How are you reading the post-Fed market moves?
Good morning, Swaraj. Yeah, I think what is standing out this week um, is the renewed weakness in the dollar. It's just fallen about 1% this week compared to where it ended last week. And the of course the larger trigger came from Fed meeting, where it was expected to be a hawkish cut, but eventually turned out to be neutral to slightly dovish. Key message from Powell being that Fed rate now is at the high end of Fed's neutral rate estimates. At the same time, it's also ruling out a hike, adding concerns about the labor market softening further. So all that, along with the fact that they also started some sort of a de facto QE, wherein they plan to buy short-term T-bills from by the Fed, and its starting amount is around 40 billion per week. So this is actually given further boost to particularly Euro GBP, and yen is also strengthened. Now, yesterday there was another trigger when initial jobless claims soared by 44,000 this week to 236,000. But again, slightly, it is to be viewed in the context that last week it had seen a fall to 91,000. That was again a record, and rise by 44,000 also record 1 week rise since March 2020. Has to be seen in the context of the fact that during holiday week normally sees claims fall to because of certain factors like there are delayed layoffs, fewer people filing the claims a little late because of the holiday and all that. So while the number could have pushed the dollar, that's not a very sustainable factor. We'd like to see how the claims number come next week as well. So in any case, euro pushed towards its key resistance at 1.1750, hovering around those levels. And considering that we also have the usual month-end demand coming up, maybe that hits the euro much earlier. So we can see the euro pushing even further higher from these levels. And definitely, like I shared yesterday, the dollar index trading below the 100-day moving average is now also a factor that will be driving traders to sell more of dollars. Of course, we are heading into another week of central bank meetings. That's another factor that keep in mind. Swiss National Bank also held their policy rate at 0%. Now, somebody holds the rate at 0% and still the currency rallies. That is a kind of special status that Swiss franc has. And still the central bank has to contend with the strength of the Swiss franc, particularly against the euro. And of course, their inflation has been very low. One of the contributing factors also has been the strength in the Swiss franc. Yes, exchange rate driven strength driven the inflation to much lower levels. Yields were lower yesterday, reacting to the jobless claims as well as, of course, continuing the fall that it has seen on the Fed meeting. Of course, 4% remains key on the 10-year. Now, commodities again, silver has risen by 13% this month, just less than half a month actually, in December. Gold has slightly underperformed. That's because the popular trade has been actually selling gold against the silver. The gold silver ratio has been just sliding. in the last few days, and of course might be getting oversold. So long as that trend is there, silver is likely to outperform much more to gold. So that is something to see. But then gold has also started to pick up. We are almost like at 4280 levels and just $100 away from the all-time high of 4383. Interestingly, we have one space in the commodity which is actually been very bearish. That is oil. It is almost fallen 18% this year. And this is, not only the supply glut, but also because of the expectation that the Ukraine peace talks are proceeding now. Uh, so we had quite a few interactions between the US side and the president's excellency of Ukraine. In fact, the president is reported to have given the US an updated peace plan with security guarantees. So there are efforts that are being made, and should that happen, I should eventually see a peace, deal being struck. Then I think base of 60 on the Brent is likely to come under threat, and that's probably is going to, important from the market's perspective, because that will push the inflation even further lower, can give space for central banks to be, relaxed on inflation, and maybe more room for Fed to cut, in 2026. So that's something that we'll watch out. On the rupee front, with no particular fundamental development, rupee again hit a new low beyond 90.45, based on just strong demand. Some outflows were mentioned, and then of course quotas were active. Of course, at 90.40, we did see some offers coming in from the central bank. What perhaps could have saved the rupee a day for the rupee would be that continuous fall in the dollar against other major currencies like as I said, euro, the CNY, and the yen as well. That prevented, and of course overnight fall. So not expecting the rupee to at least breach 90.50 level for the time being. We'll see how things proceed with regard to the trade deal. Interestingly, we have had a couple of interesting comments from officials. Yesterday, the trade minister has said that we should not negotiate with deadlines or hard stops. So they're actually preparing the market not to expect a deal with a particular date in mind or anything. Just it's negotiating, progressing. When it happens, it happens. So actually, slowly that expectation on trade deal being stuck will fade away. That at least leads to some sort of market focusing on other factors rather than happening now, happening later, that kind of situation. So that's the statement's significance. One more statement from the CE, the Chief Economic Advisor, a couple of days back, saying that not losing sleep over the rupee weakness. I was looking at what could have made him say that, because seeing rupee slide for quite a few months now. But when you look at it historically, a large falls of the rupee in a calendar year. In 2008, rupee had fallen 27%, 2011 23%, 2013 30%, 2018 17%, and this year, in 2022 again 12%, and this year we have fallen about year on year basis, we have fallen about 7 to 8%. So I think in this context is what we see the statement, perhaps not alarming fall, I would say. Yes, we are seeing one way move. Probably what could have made a difference is lack of sustainable retracements. So we just see minor retracements and immediately jumping out. So just additional context to view the current rupee fall. It's not to say that it's not going to fall further, or it's going to strengthen from these levels. I think, as we have been repeatedly saying, flows will govern the rupee's direction from here on. Thank you.
Thank you, JK. And that's been the rupee story. Flows are guiding it because yesterday, despite the broad softness in the dollar, we saw rupee hitting a new low against the dollar due to the continuous demand. Even in fixing, we were observing the same thing, a lot of demand for dollars. And when it comes to the global markets, yes, after the Fed meeting, there's a renewed dollar weakness. Of course, the trigger, of course, being the slightly dovish sort of move by the Fed, and that sort of drove sentiments yesterday, drove the risk sentiment yesterday, and that was basically the moves to look out for. When it comes to commodities, silver rose by 13% this month. There's been a sharp rally over there. Gold has underperformed, but starting to pick up. And one key sort of commodity which has not been partaking in these kind of rallies is oil, which has already fallen 18% this year due to the supply glut and progress in Ukraine peace talks. Uh, so interesting set of developments before which we end the year, and this we'll look how the narrative shapes up next year. So that's it from us today. Thanks for listening. Have a good weekend. We'll catch up on Monday with a fresh round of updates.